What's going on, guys? Welcome back to another video here. In this one, we're going to be talking about NIO. This one was a retail favorite back in 2021, has since obviously had a pretty significant fall from grace, but I do think that there is some interesting potential for this company moving throughout not only the next couple of quarters, but more so the next couple of years. Now, guys, I'll tell you right now that any time that I look at allocating my own capital to any new type of either mid to longer term investment or position trade, there's a three-step approach. It's pretty simple, but it's very specific in the criteria that I need to see in order to give me what I like to call, again, what a lot of other people like to call, that the potential for those asymmetric returns. This is the same process that allowed me to give all of you guys Palantir in the mid-teens, Hood in the mid-teens, Yin, the 3 times levered long China ETF at 20 before we ended up selling half of that position at about 51. What else? Philip Morris at 95, SoFi at 655. I mean, there's countless of these guys, and we're going to go through that in this video here. We're going to start to cover NIO a little bit more on this channel here. So if you guys are interested and you want to see more videos like this, make sure you go down and hit that like button. It costs you nothing to do it, but it helps me out a whole lot in spreading these videos out to as many people who actually want to learn. And again, if you guys aren't subscribed yet, make sure you guys do and turn on notifications so you never miss another video like this. So the first thing that we're going to be talking about here is just the chart of NIO. Just looking at this chart here, just from a technical perspective, what do we see? And as a lot of you guys that have been around the channel for a long enough period of time know, I like to buy bases. When we start to see a stock that we are interested in that is going to kind of meet the criteria of the other elements as well, the story, the fundamentals, the big picture that we're going to talk about as well. So I don't know if I said this before, but the 3 main things that we look for are going to be the big picture of the broad market, whether that be the US economy, the global economy, the Chinese market. Is there more likelihood for stimulus? What's going on with their currency? Things of that nature. You're going to be looking at the story, and that's going to kind of tie in fundamentals as well. And then we also have to look at how does the chart look. That's allowed us to get these really solid risk to reward entries on a lot of these solid investments over time. But what I will say here too, guys, again, first of all, none of this is financial advice. You guys go make your own decisions. I'm just here to give you more information about things that you're already interested in. But this, to me, I would say is a little bit more of a risky position that I have added, but I'm perfectly fine with the risk, and hopefully it works out for us here. And we're going to go over the exact reasons why I do think this is going to work out for us over the medium to the long term here. And I currently have about 4,000 shares of this. Nothing crazy. I will look to add more if I do see another opportunity. But looking at this chart here, again, we like to buy bases. What do we see? We see this really strong zone of support on NIO that it has not been able to break through really since the beginning of when people started to start looking at Chinese stocks again. So again, we have this area of interest. If we can hold this area and continue to hold, this is a really solid risk to reward spot to potentially maybe add some shares if that's what you were interested in doing anyway, or to kind of look at this and say, okay, there easily is that opportunity to have some volatility and chop down at these areas, even though it's a relatively large zone. But as long as this holds, I don't really see any reason why this is going to continue to go down there and test those really deep drawdown lows of about $1.20. Then I also briefly want to talk with you guys again. That chart right there, looking pretty good. Looks like it's forming a base. It is going to need some sort of catalyst in order to send it out of this base, and that is most likely going to be earnings, and we'll talk about that in this video as well. But let's just think about there's a lot of different elements of this thesis that I've had on kind of allocating some capital into these Chinese companies here. Last year, a lot of it was kind of revolving around the need for some stimulus coming in. They were having some pretty significant issues in their economy there. And while those still remain, it is not necessarily the biggest point of why you would continue buying anything out of China or these Chinese companies moving forward. But here's kind of another way to look at this. We all saw what happened in the last year when you saw a lot of these American companies in the AI space go on absolute moon missions and reach some pretty crazy valuations, multiple numbers, etc. Now, what you're starting to see is a little bit of a shift, not necessarily completely out of US markets, but a lot of these large institutional investors, one of them being David Tepper, is looking at the Chinese market and saying, well, if we were buying a lot of these AI companies in the US last year, and we are now looking at a lot of these different companies coming out of China that have, one, maybe similar products, and two, trading at significant discounts, I like to call it the CCP discount, why would it then not make sense to have some capital allocated to those companies? And again, I'm not talking about NEO as being some sort of AI company, but what I am saying is that these types of developments and this capital shifting and moving a little bit into these Chinese markets could be the start of the tide that kind of starts to raise all boats here. So again, I personally don't necessarily think, even with a lot of these tariffs coming out, that it's really going to cause any significant additional issues for China for the time being. Again, a lot of these are being used as bargaining chips. We've seen that happen many, many times in the past. But again, we are going to have to wait and see how those things are going to progress moving forward. Now, what some of you guys might not know about NEO is that it is positioned in the Chinese market as a premium or a luxury electric vehicle. And in this type of macroeconomic environment here, it's going to be a lot more difficult for the everyday citizen to justify spending their hard-earned money on one of these luxury electric vehicles. So what have they done? Well, they've taken some pretty significant steps in order to kind of target these different segments of the market and also increase what is called their total addressable market, or their TAM. And one of the ways that they've done this is, again, having that submodel Envo, which is kind of a more family-oriented vehicle, kind of competing with the Tesla Model Y at a more competitive price point. And they also have the Firefly model. But again, with something that a lot of people have been talking about with NEO over the last couple of years here, is that expansion into other worldwide markets, and we're starting to see this start to pick up. NEO's low-cost Envo EV will arrive in its first European market in early 2025, and then we also come over here and see NEO's Firefly EV to storm Europe by early 2025. Both potentially very, very positive developments here. Now, there is really one key thing that I personally need to see out of NEO, a metric that needs to be hit that is going to really tell me that it's okay to keep buying this company, or also keep holding the shares, or to sell that position that I've recently put on. Now, before we start kind of getting into that a little bit, again, I want you guys to think about the market a little bit differently. If you want to have different results than everybody else, you need to think and act differently than everybody else in the market here, guys. And you can look at kind of similar things that have happened to other stocks in the market over let's say the last year and a half, 2 years, and kind of apply some of those lessons to another kind of investment or company that you're looking at. And one of those good examples for this in particular is Palantir. Now, again, I'm not in any way comparing Palantir to NEO here in terms of their companies, their prospects, or anything like that. But what I want you to think about is, what was one of the main reasons why, or two of the main reasons, back in kind of 2022, that Palantir was pretty hated by the institutional side of the market? Well, one of them was that a significant percentage of their revenues were coming from government contracts. So they had a heavy concentration in their revenues in government contracts. The second thing was they were paying out a significant portion of the money that they were taking in the form of stock-based compensation, which was hurting their profitability metrics. That's the key word there, profitability. And when we take a look at some of NEO's numbers here, and you guys all know what happened after Palantir started to really diversify their clients and also start to have those profitable quarters. The stock started to really significantly move to the upside. And this right here, the fact that NEO is not profitable and their margins have taken a little bit of a hit, is one of the main reasons why NEO has struggled versus its competitors over the last couple of years here. And this is one of the reasons why I believe I outlined this briefly earlier. This is a little bit more risky than some of the other positions that I've kind of handed out over the last year here. But again, I mean, I haven't been wrong on any of them. But again, I'm not planning on being wrong on Neo, but I would really like this one to play out as well. On the third quarter of the 2024 earnings call, the CEO mentioned aiming for profitability in 2026, but he said internally that the company would aim for single quarter profitability in the fourth quarter of 2025. To achieve the profitability goal, Lee believes the core is cost control, the report said. And again, when we take a look at some of the metrics for Neo here, obviously we have seen their revenue steadily moving up over the last few years here, but their gross profit took a very significant hit. Why is that? Well, their margin was significantly moving down from the period of 2021 going into kind of the last quarter here, the second to last quarter of 2023. But what have we seen since then? Revenues have gone up and margin has been slowly and steadily moving up as well. And that's also what you've seen with gross profit there. It's not net profit, it's just gross profit. So looking at this here, again, this earnings report that we have for Neo coming out next week, I would not expect it to be profitable, and we could easily see some volatility in the short term. But for this one in particular, for the time being, I'm perfectly fine with holding this company for a decent period of time. And then I believe it's right here too. Oh, no, this one. When we take a look at Neo's trailing 12-month gross margin, again, this gives us a little bit of a better picture here. We are starting to see some of these numbers moving to the upside, but they have to get more efficient in their spending. That is the metric that I really need to see. If they can hit that profitability in the last quarter of 2025 here, that would be absolutely awesome. Again, we might be a little bit early on this one, but again, at the same time, I'm really not all that worried about being potentially early on this kind of mid to long-term position trade or investment here, because we do have some of those other key pillars that we've talked about before on our side. The rotation of capital into Chinese markets. And again, having that story and that chart be along for the ride with us as well, hanging out in this zone here. So guys, that is going to wrap up this video here. If you guys did enjoy kind of the information and analysis that I provided for you guys in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it helps me out a whole lot, spreading this information out to as many people who actually want to learn. And if you guys do want to see more videos like this, make sure you hit that subscribe, turn on notifications so you never miss another video like this. But until next one, guys, I will see you. Peace.